Sandip. Very good afternoon. Thank you so much for joining in with us on ET now. And I'm going to talk with the basics, right? Q3 numbers just around the corner now. 2 days left to go to start with the major IT companies. For Q3 FY24, could you tell me some key positives and key negative triggers that we should watch out for from IT companies in Q3?
Yeah, hi, good afternoon, and thanks for having me on the show. Yeah, so we are just like 2 days when we will start seeing the numbers coming from the large names like Infosys and others. So one thing is very clear that everyone knows that this is a furlough quarter where manufacturing sector, which is 20-25% of the industry, undergoes massive furlough because of the holiday season and other reasons. So we will obviously have an impact of that this year as well. It can be no different, and that's the reason the expectations around the growth for quarter-on-quarter growth numbers is quite muted. So that is a good thing to start with because expectations are not very high. Also, additionally, in this quarter, there is a negative impact of cross currency, due to which, while the constant currency growth will be still little decent, but the dollar growth will be mute, can go even into negative territory. So, having said those two things, I think what we should expect from this quarter and every year from quarter three, the bigger expectation has been what are clients talking about the next year because budgets gets freeze around this time. So that is a forward-looking thing, and that is the most important thing in my view. So I think the more focus on this quarter will be on the commentary and the client budgets. Number one. Number two, I think the positive surprise will be mostly from the margin front because the attrition numbers have fallen very sharply for the industry in last 2 quarters, and this quarter there will be further fall in attrition number. And once attrition falls, you will see sharp fall in replacement cost and other associated costs, which will lead margins to give a positive surprise. So I would say that this is a quarter where you will see muted revenue growth, good profit growth, and a good commentary on the budget front. That is the way I see the quarter. And according to me, this sector has gone through a good time correction. So possibly you will see another, that 10-15% return which this sector gives every year at different points of time. That time will be, sometimes in next few months, where it should deliver that return.
Sandip, Somit also joining into the conversation. What is that one key earning that you'll be watching out for on the positive side and also on the negative side?
So I think, on the positive side, obviously, we will look at the deal numbers, how they are shaping up, because in my view, deal numbers should be good in this quarter, and at least the commentary on the deal number will be very good. That is, the pipeline commentary will be very strong because, we have seen last 1.5 years because of expectation of a hard landing in US economy and all those things, the deal flows and the deal environment has not been as robust as it should have been given the digital and the AI explosion which is happening in major economies in the world. So I think that will start reflecting in the commentary now. So the commentary will be most important, and in my view, commentary will be positive for the sector. Also, margins will be positive. On the negative side, I think this attritions, people will be concerned, the attrition which has happened in the top level, and also I think to some extent the revenue growth which will be muted, that will be probably a little concerning. And also maybe if the guidance revisions are there on the downside, that will be little concerning. So I would say that revenue growth can be muted and guidance, some trimming on the upper end of guidance could happen, but at the same time, good positive surprise on the margins and good commentary on the deal pipeline for the next year should be there.
Okay, surely, obviously commentary is going to be key, like you're mentioning as well. But, Sandeep, what would be one earning, whether mid-cap or large cap, that you think will actually be an outperformer? Obviously commentary is key, but would be an outlier and an outperformer in the IT space in Q3? Is there anything specific in terms of that we could expect?
So, I again believe that mid caps will outperform in terms of revenue growth very clearly. And the reason obviously is multifold. One, their size is different. Secondly, most of them have diversified themselves very quickly into areas where, growth was faster. So the likes of L&T Tech, Tata Elxsi, KPIT, and LTTS, they should be well positioned to deliver slightly higher growth than the large cap. So that is very clear. That will be a trend. But at the same time, I think the commentary and the outlook for even large caps will be good. So the valuation at which large caps are available, those valuation will be looking quite attractive and good with the commentary which will come.